love the channel and find it useful in becoming a happy retiree. Subscribe today. Nancy, good morning. Welcome to Money Matters. What's going on? How can I help?
I've been hearing that we could expect some kind of a correction in the market, and I was wondering about your opinion of purchasing some precious metals like gold as a hedge against a major correction.
Well, we always hear about corrections coming. Where are you hearing about these corrections?
Here and there, online, major financial gurus, neighbors, etc.
Online financial gurus. We better be careful then. You got to be careful about the online financial gurus and the fake news. But here's the bottom line. I guarantee you we'll have a correction. Of course we will, because we always do. But I will tell you that every day of the week, it's 24 hours a day, 7 days a week, you're going to hear scary stuff about the economy, the world we live in, because guess what? The economy is scary and the world we live in is terrifying. And all of that eventually comes home to roost in stocks, and it scares everybody. We get emotional and stocks sell off. So corrections are a fact of life. And when you hear the prediction of a coming correction, it's kind of like predicting that the sun will come up tomorrow. I have this grand prediction that tomorrow the sun will rise. That's effectively what internet financial gurus are telling you, because it's going to happen. It always happens. What you see, though, behind those, Nancy, is the propagation of fear. And it's real easy to scare people, especially in the world we live in today. I mean, you can just bring up, off the top of my head, what happens if North Korea successfully tests a missile that goes more than 100 yards, right? That's scary. What if we have another... Well, we're already there's constant wars in the Middle East. They'll never go away. They flare up. We have refugee crises around the world. We've got this crazy relationship with Russia. What happens there? We've got the European central banks, the United States central banks. Yes, we just tested a bunch of banks and they seem to be great. What happens if one of them goes away, right? Or what happens if there's some accounting issue at a big giant bank? What does that do to the market? So there's always, Nancy, these tremendous underlying worries about the stability of the world we live in. And that never changes. We just got to live with that. That's why investing, quite frankly, is so hard, Nancy, is that you're always going to be nervous about something like this happening. And I think today, Nancy, in the world that you and I live in, it's probably scarier than ever, because you're sitting around on the internet, and 20 years ago, before you could sit around on the internet, you might read the paper once a day, but there was less crazy juice injected into the system. Whereas today, you're literally swimming in it. And if you sit around and read the internet and you click on one story that's a scary story that's probably propagated by a newsletter that's going to also tell you that the world's going to end and you should buy gold, and by the way, they sell the newsletter for $99 a month. And guess what? You're now tracked for probably the next year, Nancy, and you're going to see not just that same ad that comes up with a scary story about the world ending and you should buy gold, but you're going to get 5 other newsletters that talk about the world ending and you should buy gold or fixed annuities or something like this, because now your behavior online, Nancy, is tracked by all of the computers that surround us. So we've got just a very nerve-wracking world, and we get preyed upon as soon as we show interest in any subject. I clicked on, what did I order the other day? I ordered online something for my son's guitar. He needed guitar picks, and I have not stopped seeing ads for guitar picks and guitar capos and guitar strings for the last couple weeks solid, and we just get tracked. And that's where I think you find yourself. Now, let's get serious for a second about gold. Here's when you want to own gold. Gold is, in my opinion, gold is an asset class, and it's just like stocks are an asset class, bonds an asset class. Gold's its own individual. All right, and gold is the kind of asset you want to own when we go through extremes. So think about the 1930s. We had this great period of deflation. The economy contracted tremendously. We had deflation. That's when you want to own bonds, for safety, and you want to own gold. If you go to the 1970s, think about the 70s where we had this massive inflation. Well, we wanted to own energy stocks for inflation, and we wanted to own gold because of inflation. We wanted to stay very far away from bonds. Go to the 1990s. Think about the productivity boom of the 1990s. Well, then we wanted to own stocks and we wanted to own bonds, but we didn't want to own gold. I would say today, Nancy, we're a little bit in this Goldilocks scenario where we don't have a whole lot of inflation and we don't have a whole lot of deflation. We are in, and I've talked about this terminology, the Goldilocks is just analogous to not too hot, not too cold. And when we're in that kind of environment, gold, in my opinion, doesn't really protect you. I mean, there's this thought that, hey, you buy gold, the stock market goes down by 30%, gold goes up. That's not true. There have been times when that's happened. So if you go back and you look at stock market corrections, you can find periods of time where gold actually went up a little bit. But more often than not, gold is just as volatile and just as unpredictable from a price perspective as the stock market. So it's always funny to me that we hear ads that gold is this magic elixir that's going to save us when there are periods of time where gold can drop 10 and 20 and 30% in a heartbeat, but yet it's propagated as an insurance policy. Nancy, if you really want protection when the next time stocks go into free fall, the protection will be not in gold, not in some sort of pie-in-the-sky annuity that promises the world, but in good old-fashioned U.S. government bonds. That's where we find safety. That's where the world finds safety. Now, the day that goes away, I don't have an answer for you. But for now, and at least in the next decade or 2 decades, as long as the United States can still pay its bills, and we can, despite the debt that we have, the place that money goes and flows to safety when things get scary in the world, it's government bonds. So if you want protection from a big stock market correction, you have to go to the safety, security, predictability of U.S. Treasuries, not gold. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.